Stuart, over to you for the presentation.
Fantastic. Well, hello everybody. In a couple of seconds, what I'm going to try and do, I say try, is share my screen a bit. Although I seem to, oh yeah, here we are. My cursor disappeared. In order so that we can talk through some slides, just as a sort of visual aid to talk through some of the crucial things that I'll be talking about. So I'm just going to click on continue to do that. Yes, look at this. Technology is working, he says. And share. There we go. And that's me, Stuart Dobbins, Technical Claims Manager, NDML and Club Insure. So we are, for your information, we are a broker that specialises in hospitality, in pubs, clubs, nightclubs, restaurants, all that sort of thing, basically. So we're a broker that's entirely dedicated to that particular sector, which means we have direct involvement in the creation of policy wordings, the discussions of coverage, direct links into the upper echelons of the insurance companies that we deal with. And so really my role in all of that, as I mentioned at the start, was really just to become involved in those more technical claims when we have them. And I don't think there's many more technical claims than the COVID-19 situation that we've been dealing with across the country for the last 14, 15 months or so. So really, there's a few things that I'm going to look to touch on in the course of this webinar. And most of it will have as the sort of centre of gravity the COVID-19 Supreme Court case, or the various legal actions that have been taking place over the last few months. However, there's a few satellite issues that will go around that as well, which I'll touch on and maybe digress off for a little bit, as is my wont. The main things that I'll be looking to address for you guys, and these are, I think, were detailed on the website, were things such as the general insurance position post-COVID, where are we now, what the High Court and the Supreme Court cases may mean for different types of policyholder, the Financial Conduct Authority's current position and the facilities available to policyholders and businesses on their website. Some hints and tips on making a claim, or making a successful claim, hopefully. What you as businesses, policyholders, customers, insurance customers might need to do or might need to think about when seeking to arrange insurance in the current climate. And then ultimately, once I've done all that, then it's questions from the floor, really. So to begin, and before I get into the meat of the slides in terms of the issues with the High Court and the Supreme Court, I suppose the main thing to talk about, or the main thing to address, is the general insurance position post-COVID. And I'm sure it won't come as a surprise to a lot of you that the general insurance position is one which has seen a great deal of hardening in the insurance market. When I say hardening, that's a term that's generally bandied about by insurance brokers and insurers, which basically means that it's quite difficult out there, and for quite substitute extremely. Effectively, we're in a situation whereby, whereas before you'd be able to negotiate deals, you'd be able to get a bit of wiggle room from insurance companies on things, you'd be allowed a certain amount of discussion over premiums and covers and what have you. Now the situation is hardening a great deal. This is not a purely COVID-based issue, but it is something that COVID has exacerbated. In actual fact, it was started probably from the Grenfell fire, which is where obviously the tragedy that took place, I think about 2017, gave rise to a number of insurance issues that came out of that in terms of the design of buildings and the construction of composite panels and all that sort of thing. That started to make insurers quite nervous. And it's a nervousness and anxiety that has just been exacerbated, like I say, by COVID-19 going on. So at the moment, for both policyholders and brokers, as in with the people who are placing business for policyholders, it is quite difficult out there. And I think it's something that we're going to have to ride out for maybe the next sort of 6, 9, 12 months or so, until such time as we get into a recovery process, whereby the market will start to soften, and we'll be in a position whereby insurance can be negotiated like in the old days a little bit more. So that's really where we are at the moment, and that's where we've got to. But I suppose the question is in terms of the actual insurance items that you're most concerned with, I I suppose, and what most clients have been concerned with over the last 14 to 15 months in the hospitality industry is that's relating to the Financial Conduct Authority's case against the insurance companies, or against a select amount of insurance companies, in terms of establishing whether there is coverage under their policies for the losses that came out of enforced government closures in March 2020, and then was repeated at various points throughout the last year as well. So basically, I am going to talk to you about that a little bit. I'm playing for time while I find the arrow, then I need to change the slide, and look at that, soft fade. So the FCA test case, for those of you who maybe not aware, the FCA is the Financial Conduct Authority. They oversee general insurance issues in this country and liaise with insurance companies to ensure that they're acting appropriately. The background to the whole test case was that, and again, most of you will be aware of this, I'm sure, will have had, unfortunately, very, very first-hand experience of it, but it's that the majority of insurance companies, almost without exception, didn't provide any coverage or refused coverage when the pandemic hit. So in March 2020, there was a vast number of claims were submitted from policyholders in the hospitality industry, all believing that their policy should provide a response to the interruption in their business caused by COVID-19. And almost without exception, the insurance company response to that was that there is no coverage. As in, they said, we believe there is no coverage. Now, I think it's fairly safe to say that there were three different types of policy at that time. There were some policies which were absolutely not going to provide any coverage whatsoever. Either they didn't have any extension for disease or what have you, or they limited their coverage to things such as, well, to a list of very specified diseases. So they would say, we will cover typhus, yellow fever, measles, rubella, all these sorts of things. COVID-19 was not on those lists for obvious reasons, because it only sort of developed about 6 to 8 weeks previously. And therefore, those policies just weren't going to respond to anything to do with COVID-19. The second set of policy types were what we probably call the amber set, which is those where we thought you could probably argue that there might be some coverage, depending on how you looked at it and what perspective you were bringing to those particular policies. Those are the policies where it said that they would provide cover if a notifiable disease happened on the client's premises. So those, we thought, well, this is a notifiable disease, okay, so we can make a proof that that there's a instance of COVID-19 on the premises, then we've got a case. The problem with that was that the argument followed that when everybody was closed in the last week or so of March 2020, the insurance company said, well, it wasn't because you had somebody with COVID-19 on the premises that's caused you to close and therefore lose business. It's because the government has closed your business down. So, A, you may not have had anybody with COVID-19 on the premises anyway, but even if, say, somebody who worked behind the bar had COVID-19, that didn't immediately cause you to lose turnover or profits. What did cause you to lose turnover or profits is the action taken by Boris Johnson and his government in closing all the hospitality industry, and that's the proximate cause of your loss. So therefore, those policies and the insurance companies that had those policies said, this isn't what our policy provides for. We don't provide for a national closure. We only provide for specific instances where, you know, heaven forbid, you find that Ebola is on your pub or club premises, then you have to close and we cover you for losses stemming from that. So those are the sort of amber ones where we had an argument, they had an argument, and sort of there was a bit of an impasse caused there. And then the other ones were the policies where we felt there was a very good argument to say that insurance policies should respond. And those were insurance policies such as, you may have seen, the Hiscox policies, certain QBE policies, basically policies that were very open-ended, said that they provide coverage for loss of turnover, loss of profits, in the event that there has been an occurrence of a notifiable disease. So occurrence is obviously a very broad word in terms of that it doesn't narrow anything down to geographical location or time specific or anything like that. It just says occurrence of notifiable disease. So you've got a situation like that and you think, well, that seems to respond. However, Hiscox and QBE and various other insurance companies that carry these wordings basically said, no, sorry, we don't agree. It's not the intention of the policy to cover a pandemic. It's more concerned with much more localized events, and we don't think that our policy should respond. Now, there was a significant period of argument, probably for about 3 or 4 months, over those kind of policies. And eventually, the FCA decided to bring a case into the High Court to test certain principles within insurance policies and to assess whether those principles would give rise to coverage for policyholders. So what they did is they took Hiscox, QBE, MS Amlin, there were a few other ones, coupled with RSA, Zurich, Arch, and they basically said, right, we'll put these in front of a High Court judge, we'll argue the case, and they can decide whether they're going to respond. So the main thing to take away from that is that whilst it's obviously very good that the FCA and the High Court were willing to test these cases, it was a very limited number of insurers and policies that were being tested. So you've obviously, I divided the policies into 3 at the start of this. So really you're only taking one of the thirds of those that is being tested, and not all the insurers and the policies in that final third were tested themselves. So what you're trying to do is draw out some general principles from the High Court judgment that can then be applied across the wider insurance market as a whole. So that's really the background to the FCA test case. And in around sort of July, August last year, the case was heard, and eventually a ruling was passed down. Now, the High Court ruling was eventually released in September 2020. That initial ruling suggested, as it says there, some insurers were obliged to meet claims while others were not. So to a degree, we felt that that was good news. There was some very positive things coming out of it, but it wasn't the sort of home run that we thought we were going to get. There was certainly some policies, and I'm thinking specifically the QBE one, where the High Court actually said that they didn't think coverage applied. And the reason that they didn't think coverage applied, and I won't bore you to tears with the reasons, but it basically hinged on the interpretation of one single word, the word event. And they said that the QBE policy, which mentioned the word event, simply 5-letter word, was enough for hundreds upon thousands of policyholders not to get any coverage. Now, the judgment seemed a bit contradictory in places, because at other times the same argument was used to say that coverage should apply and say that coverage shouldn't apply. So after the High Court, we agreed that effectively, to use a footballing metaphor, we were at half time. We were probably 1-up at half time, but we felt that there was more to play for. So effectively, what was agreed with the Financial Conduct Authority is that the matter would be appealed. And because the judges that had heard the case in the High Court were actually appeals court judges, it meant that we didn't have to go straight to the appeal court. We could just leapfrog the appeals court and go straight to the Supreme Court. So the Supreme Court case was decided to be brought, and that came towards the end of 2020, with the judgment being ruled in January the 15th, I think, this year. Now, the Supreme Court judgment overturned some of the rulings in the High Court, and again, specifically the QBE one. So they said, well, they said quite a few interesting things about that if you're a bit of a legal nerd, but basically what they did is that they said that the argument that was used in the High Court to dismiss the QBE coverage didn't hold water because of some complex causative reasoning that eventually got to a point where they said, yes, it responds. Now, the QBE wording was one which basically said that it would provide coverage if there was an instance of notifiable disease within a 25-mile radius of a business premises. Now, that's quite crucial because you'll probably, some of you will have been aware of radius clauses, and it's something that will probably come up a little bit later in terms of what does that mean? Because you can have somebody who's got COVID-19 24 miles away from your premises, and clearly that person 24 miles away doesn't actually have an impact on your business premises. It doesn't immediately cause a downturn in turnover, but that person 24 miles away has been a contributory factor to the government starting a lockdown, which has then caused an interruption to your business. So there's a sort of chain of reasoning which the Supreme Court followed, which said that actually if you could prove that somebody within 25 miles of your premises had COVID-19, they are a small but sufficient proximate cause of the government lockdown, which then caused the downturn in your turnover, which then caused your claim, basically. So that's what they found, and that's a key part of the causative reasoning that has opened up quite a lot of insurance claims as a result. The Supreme Court also overruled the Orient Express case, again, without wishing to bore you to tears with this, but the Orient Express case was, the Orient Express was a hotel in New Orleans that got hit by Hurricane Katrina. And the Orient Express case, they claimed for business interruption when Hurricane Katrina hit. Their buildings were damaged, and obviously New Orleans was completely wiped out. Now, the judges said that they couldn't, in the Orient Express case, couldn't claim for business interruption because everywhere was wiped out around them. So even if the Orient Express had been completely undamaged by Hurricane Katrina, everywhere else was flattened. There was no people around. No one was going to want to stay at a hotel. So therefore, you couldn't claim business interruption. And the reason for that was that business interruption historically always follows on from damage. So your premises burned down, you can't operate out of it, you claim business interruption, and that's what, and the business interruption follows from the damage. In the event that the Orient Express Hotel was damaged, it was neither here nor there whether it was damaged or not. They were never going to be able to engage in any business at all during that particular period. Now, even recounting that to makes it sound like that's bad law. And I think when it was passed down, a lot of legal commentators said that's just bad law. I can't see how that can stand. However, it did stand, and it set a precedent globally in certain cases, which this particular case was very keen to go for. So basically, the Supreme Court case and the FCA case overruled the Orient Express matter, and it has set a new precedent. So going forwards, heaven forbid we have another hurricane or anything like that, but one wouldn't apply Orient Express to that. We would probably apply effectively the FCA Supreme Court ruling to it. The winners, and I've put winners in inverted commas because it's difficult to talk about winners and losers in these kind of situations, but the winners were the clients insured with Hiscox, QBE and MS Amlin. That's the majority of our clients that are insured with those kind of insurance companies. There are others who had some kind of success coming out of the Supreme Court case. But those were the main winners, and those are the ones that you've probably seen grab the headlines. Coming out of that, the aftermath. Again, this is going to be a bit insurancy, so I'll try and make it as user-friendly as possible. There were two types of clauses, really. I mean, they said there were three. There was one called the hybrid clause, which kind of joined a few bits together. But the main ones we're talking about are non-damage denial of access and disease clauses. So non-damage denial of access is exactly what it sounds like. It basically says, well, normal denial of access says I can't get into my premises because the front of the building's collapsed. So that covers you for business interruption because you can't access your premises. Non-damage denial of access is when nothing's been damaged, but you still can't get access to your premises. So that could be an unexploded World War II bomb, it could be a gas leak, it could be a road traffic accident, maybe around the corner and the police have sealed off the road, all that sort of thing. So those are the sort of things that intends on covering, but obviously there was the possibility that it also stretched to covering things such as a pandemic. In actual fact, the Supreme Court ruled that those kind of clauses have very limited coverage in the event of a pandemic, and only with a very specific type of wording. Indeed, I say a very specific type of wording, it's actually a very loose type of wording. Any wordings that didn't seem to have really tightened themselves up to understand what they were looking to cover opened the door a bit more to that kind of coverage being in place. But effectively, they ruled that non-damage denial of access coverage is really, apart from in a very few circumstances, it's designed to cover things like a gas leak, unexploded bomb, that sort of thing. The disease clauses, however, were those obviously that were tested which had fairly loose wordings, and the ones that mentioned radius, radii, occurrences, and those provide potential coverage. However, The amber cases that I talked about previously, where we refer to at the premises, as in the disease only manifest at the premises, they were not specifically addressed in the Supreme Court judgment, which is a cause of unending frustration on my part, and no doubt for you and a lot of our clients as well. So what we've got is a situation whereby radius and occurrence clauses, so by which I mean disease takes place within 1 mile of the premises, 25 miles of the premises, or just generally occurs somewhere, those provide coverage. If your policy says that COVID-19 or notifiable disease must happen at the premises, the Supreme Court is silent on that specific position. However, the causation arguments that I referred to regarding QBE and the 25-mile radius, I think can be applied to those disease clauses which just restrict cover to the premises. So like somebody being 24 miles away being a causative factor of the lockdown, which causes a business interruption, my argument has always been, since the judgment was passed down, that somebody on the premises, even though they're not directly causing the business to suffer necessarily, they may not even know they've got COVID-19. They are nonetheless a causative influence on the government's decision to lock the country down, lock hospitality down, and therefore cause a business interruption loss and therefore cause a valid claim. So what I did shortly after the judgment and shortly after being told to go forth and multiply by those insurance companies that had those wordings, I had a conversation with the Financial Conduct Authority, spoke to them, specifically spoke to their barristers, the barristers that have been involved in this case. And what they said is that I should present my arguments to them and they would have a look over them, they would consider our position. That has been done, and in quite a lot of detail set out the arguments why we think actually the Supreme Court case does open the door to these particular policies. That is still under discussion at the moment. So whilst I'd love to be able to say, great news, there's been developments here which open the door to a lot more claims, that's not the case at the moment, but equally nothing has been written off at the present time. So really we're just waiting for the Financial Conduct Authority to provide us with some kind of guidance on that, and then that will inform how we go forward. Now that could be the Financial Conduct Authority agreeing with us, it could be the Financial Conduct Authority choosing, well, deciding that maybe they need to raise another court case in the High Court, for example, or it could be something whereby a number of different clients, policyholders within a certain sector band together for a class action and take that matter further independently of the FCA. At the moment, we don't know, but I think that the crucial thing, the wise thing to do is wait for the FCA to pass that down, and then we can make an authoritative judgment about where we go from there. On to the next slide. What's next for insurance? The bad news is that any possible coverage for COVID-19 has now been removed from policy wordings. So effectively what that means is that COVID-19, any reference to it, any potential coverage for pandemic, coronavirus, all kinds of synonyms for the pandemic have been removed from policy wordings. It's going to be almost impossible going forward to get any kind of business interruption coverage for COVID-19. So my advice really is that businesses should check whether COVID-19 is indeed excluded from both their business interruption section, but also, and I think this is quite crucial, whether it's excluded from their liability section, because I've seen some insurance companies want to exclude COVID-19 losses from their public liability section of their policy. So effectively what that means is that if somebody is on your premises, a guest or whatever, a customer, they get COVID-19 and it's caused by them being at your premises, the policy, if it excludes COVID-19, would not cover any claim that was being brought by that customer. Now, I think that, firstly, I think that's pretty bad form on the part of the insurance company. I should state that it seems unlikely that someone will be able to prove that they got COVID-19 on your premises. That's almost impossible, I would imagine, especially as they could have got it on the bus on the way there, in the supermarket the day before, anything like that. So it would be very difficult for them to prove that you were responsible for it. And even if they could prove that they'd caught it at your your premises, they would have to prove that you would be negligent somehow. So you had done something or breached your duty of care to that person in protecting them. And if you're following general government guidelines, you're cleaning, you've got a good sanitisation procedure that's well documented, you're taking all the reasonable steps, then it would be difficult for, I think, it's yet to be tested, but it'd be difficult for a claimant to prove that someone had been negligent. However, you could imagine a situation whereby 25 people all go to the pub on Saturday, and the week later, all 25 of them have got COVID-19. There might be a case for all of them to say, well, we definitely got it at this one single place, and that's where the claim could come in. So what I would recommend is that it's for everyone to check their policies as of now, because endorsements may have been added at renewal or what have you, to see whether their public liability section also has coverage removed for COVID-19, because that may leave them exposed. I don't want to sort of set any horror stories off, because I think it is still a remote possibility. But I think what is likely to happen over the next 12 months is that somebody's going to try it. Somebody's going to try and make a claim against somebody for catching COVID-19. In the same way, slips and trips and all these sorts of things pre-COVID were the bane of everybody's life in the hospitality industry. So I think somebody's going to try it. If somebody is successful, that will then cause a snowball of cases. Even if they're not successful, periodically people will try and pick on a certain business and say, I got COVID because of you, and I want to claim some kind of compensation. So that's the first thing I think which probably needs to be looked at. The second thing to expect, unfortunately, is, and I unforgivably have misspelled premiums there, pre-mums, so I'm dreadfully sorry, but the increased premiums are likely to be a feature of renewals going forward. Insurers will look to recoup their losses. As you can imagine, insurers and bookies very rarely lose. And ultimately, if they've had to pay out quite a lot of these things, a lot of these cases, they will seek to recoup their losses. And I wouldn't be surprised to see increased premiums happening across the board. That's where your broker comes in trying to negotiate these things, albeit in a hardening market. So there's a limited framework of parameters within which a broker can move. But a good broker should be able to still represent that client to the insurance company and get a competitive premium going forward. That sort of brings me on to my next bit, which is that businesses in the hospitality industry should seek coverage from a dedicated broker. I can't begin to think who that might be. He says, standing in front of a billboard saying NDML and Club Insure, but we are a dedicated broker for the hospitality industry. So what that means is that obviously we will understand the sector and the events of the last 12 months. We've been very heavily involved in that, and we'll be able to speak directly to that sort of thing. We have bespoke markets and wordings which are tailored directly for that kind of thing. And also we provide a dedicated claims facility, so clients aren't reduced to managing their own cases. There have been some again, not horror stories, but sort of some sad tales of people who we've spoken to and businesses that we've helped out sort of on a pro bono basis to help them with their claims, because their own broker has basically disappeared. Can't get hold of them, they won't assist. Certain brokers don't have a claims department, so they don't know, they won't be able to handle that claim on behalf of the business. The business has been forced to represent the claim themselves. And all those sorts of things are very frustrating, especially for those clients who actually probably do have a valid claim. So they've actually got past the hard bit, and now trying to get the claim paid from their insurance company is proving to be very hard. So having a dedicated broker, especially one with a dedicated claims facility like ourselves, I would say is definitely worth considering and worth asking your own broker about, because that's really when you know you're going to have somebody on your side to be able to deal with this sort of thing. The final thing I've put there is possible crisis re facility. This is sort of what do they call it? Blue sky thinking, or possibly maybe the opposite of blue sky thinking. Basically, what it is that what happens? Well, now we know that a pandemic can occur. What do we do to prepare ourselves for the future? Now, what what we would normally do is insure for these things, but clearly insurance companies are taking possible coverage for COVID-19 out of their policy wordings, meaning that nobody can get coverage for COVID-19 or pandemics, but we know that it's possible that something might happen in the future. So given that that's the situation, the thing that's being talked about, and which I've drafted a proposal for, which I think is being looked at by certain areas of government at the moment, is what's known as a crisis re facility. And what that does is it sort of mimics what was known as pool re, which was a facility that was set up at the end of the 80s and the start of the 90s when all insurance companies stopped selling terrorism cover. There was obviously a fair few terrorist attacks around that time, both on the mainland and in Northern Ireland, but nobody could get coverage for it. So a pool reinsurance was created at that time, into which insurance companies paid, and it would respond in the event of a terrorist attack. Another one was created many years later, called flood re, which is when householders who had houses close to rivers and floodplains and all that sort of thing, and couldn't get flood insurance, were able to take advantage of this flood re pool, which would pay out in the event that there was a claim for flood that happened to their property. So crisis re is really my thoughts about, well, there's so many known unknowns, to quote Donald Rumsfeld, out there, that what we really need is something, a big fund of money, that if the government says this is now officially a crisis, can be, the purse strings can be opened up and we can fund that. And it's a fund that we can keep putting to over the years, make hay while the sun shines, fix the roof while the sun shines, choose your metaphor as you will, but you can do that, and then if there a crisis does occur, then we've got a fund that's ready. It also stops the government having to be the person that bails out people affected, and it also means that we've just made that preparation. So there's various discussions about how we're going to do that, whether we pool, no pun intended, the pool re and terror and flood re funds. Who knows? But there's various ways and means of doing it, and I'm sure that's going to be considered as we go along, especially as we start coming out of the pandemic and hopefully into a bit of normality. So that is a very brief overview, he says, trying to find his cursor, of the there we are, of the situation that's transpired in terms of the Supreme Court and the High Court. Now, I think when I set out the elements that I was going to talk about, I think I talked about the general insurance position, which hopefully I've addressed there, the High Court and Supreme Court cases, the Financial Conduct Authority's current position, but also wanted to talk about things such as things that policyholders such as yourselves may be able to utilise. Hints and tips potentially on making a claim, facilities available to you in terms of pursuing that sort of thing. Now, I think the main thing that I would probably raise is that the Financial Conduct Authority's website does have some very useful tools on it. Now, there's two that immediately spring to mind. One of those is the policy checker, which is effectively a series of screens that you'll go through, answering questions about your own policy, and then it will tell you if it looks like your policy may respond to losses arising from COVID-19. It's useful to a degree, but I'm going to caveat that, and probably the next thing I say as well, by the fact that it's only as good as an algorithm can be, really. So it might give you a good idea in terms of framework, or a good idea of pointers as to what things you might be looking for in terms of your policy, but it doesn't necessarily give you an absolute bottom line on these sorts of things. So I think if you're curious and you haven't been able to get any kind of advice from your own broker, that's quite a good place to start. The other thing that's on the FCA website, which I think is probably quite helpful, is I'm not sure what they're calling it, but it's something basically about proving COVID-19 in your area. And that is for those policyholders that have something in their policy that says the insurance policy will cover COVID-19 within a certain radius. So that could be 25 miles away is the standard QBE one. There's others out there which say that you've got to have COVID-19 within 1 mile of the premises. Now that checker basically tells you to put your postcode in and gives you a date range to put in, and then it will tell you how many cases they believe were in that particular area at that particular time. Now that's a very good, very quick engine for understanding what it might be in your area. And obviously, if you put the postcode in, say it's a 1 mile radius, and they throw up 3 cases, all you have to do effectively is save that screen, print that screen or whatever it may be, send it off to your insurance company and go, there you go, everything's proven. To be honest, a lot of places will already have had the hard work done for them by other clients. And specifically, if you live in very large conurbations and what have you, say if you live in London, it's very likely that somebody nearby will have also submitted a claim, which would be on the insurance company's records, and they'll know that there's a case within that particular area. So the guidelines from the FCA are that insurance companies shouldn't make every single policyholder jump through a hoop. If sufficient numbers have proved that there's a case within a certain area, then great. You know, if someone else comes along, someone new comes along with a claim, and they fall within that particular area, don't make them do all the work again. So that's something that's out there. The one thing I would say is that, and again, I feel like I'm talking the FCA down here. I certainly am not. I think that certainly that tool is very useful. But I had a case that we managed to get paid, in fact, which was to prove that there was COVID-19 within a certain radius. I think it was 1 mile radius. And it was a golf club that was actually pretty much in the middle of nowhere, somewhere in Nedworth, I think. And when I put it into the engine, into the FCA engine, it came up that there were no cases in that area. I sort of took a slightly different tack and did some digging around on government websites and using government statistics and various other things, and managed to prove that in all likelihood there probably was a case of COVID-19 within that area, and the claim got paid. So the only thing I would say is that if you use that facility on the FCA website and it comes up with 0, don't be disheartened. There are other ways of proving your case. It just might mean that there's going to be a bit more in terms of work to do in order to get to that particular point. Now, I've produced a hopefully brief and hopefully understandable document called Proving Cases of COVID-19, which I've passed on to Sylvia. And I think will be sent out to people on this webinar after the webinar, so you can have a look at it. Basically, what it is, it's a précis of the FCA's document. The FCA produced a document that's about 25 pages long. Mine is about 2 pages long, but hopefully captures all the salient points of it. It's all to do with things like MSOAs, as they're called, middle super output areas. There's a lot of statistics that you can get to on government websites that prove that the population of an area, the amount of COVID-19 cases in that particular area. The case that I actually dealt with was one where I had to prove one case, and I managed to confirm that there'd been 10 deaths within a certain area, which was bigger than the area I was looking at. But then when I sort of shrunk that down and then used the amount of deaths compared to the amount of cases that it might relate to, I managed to prove that there was about I think 333 cases likely within that area. Then I shaved that down into the per square mile, and eventually I got a case where it said it was likely there would be 9 cases in that particular area. So that's really a way of doing it. It's about taking a big number, reducing it until you get to your point. And if it's above 1, then you've got a fairly good case, I think, to say that there should be a claim considered. One other thing that I think is probably worth considering in that scenario is the presence or the proximity of major roads in a particular area. I'm dealing with a claim at the moment for a golf club that is in the middle of the country, but in an area that really doesn't have anything anywhere near it. And they're struggling to prove that there's a case of COVID-19 within a 1 mile radius of it. But what's interesting is that the golf club is within 1 mile of the A17, which is the major arterial route from Norwich to the Midlands and the North. So having a look at traffic statistics, I know the lot of a technical claims manager sounds pretty exciting, I know, but so I've had a look at all of that and worked out there was probably 45,000 cars per day on there, each of them carrying 2 to 3 passengers, very likely that one of them had COVID-19. So even if a car flew into that 1 mile radius and then flew out of it, my argument is that there you go, you've got an instance of COVID-19 in that situation. So basically, all of that is to say, use the FCA website. If it works for you, absolutely great. If it doesn't work for you, don't be disheartened. As Sylvia mentioned, we're willing to give advice and assistance where appropriate to people who are befuddled by this whole situation. We'll endeavour to give you some salient points. But ultimately, it's a question of coming up with a good argument, and hopefully we can assist you guys to do that should you need it. In terms of the entire thing, I now have rabbited on for unbelievably about 45 minutes. So what I propose to do, hoping that I've managed to address quite a lot of that, is to come off this, he says, not knowing how to. Oh, stop share, look at that. Look at that, and here I am. And hand over to Sylvia, who is going to be the compare without compare, and is going to fire questions at me, should there be any.
Stuart, thank you so much. I feel very well informed now about insurance, and before I had a sort of broad knowledge or a sort of overview, but that's been really, really helpful at exactly the right level. So I hope others found that helpful too. We haven't had any questions put forward so far, which I tend to think is because you have been very, very clear and concise about the information you've given.
Well, that's very kind, but it might have been because I was going at 900 miles an hour and no one could understand me. But if anybody does have any questions, it's speak now or forever hold your peace, as they say.
This is it. So I don't know if anyone does have any specific questions. It might be that you get some contacts after this, because I imagine that it might be that people have either got something that might be sensitive or quite convoluted to explain on a call. So it might be that that you get the contacts afterwards, Stuart, rather than on the call.
Oh, yeah, absolutely. And I'd be more than happy to answer any questions that come along. Anybody thinks of after the webinar or something later on today, then just drop me a line and we'll have a chat about it. I'd like to think that I've seen most things, but having said that, I'm always willing to see that there's going to be a new thing coming along that I haven't seen, and I'd like to get my teeth stuck into it. So yeah, by all means, throw whatever you can at me.
Excellent. When do you expect to hear your sort of the results or the thoughts of the proposal that you put forward about the crisis proposal?
That's a very good question, and it's something that has gone out of my hands into much more high pay grade people than I. I basically got charged with putting together something that might make sense. So I scribbled some things down and put it into a document and sort of molded it around so I could work out where money was going to come from. That's gone off to our MD, who I think has presented it to a select committee, or a select committee has got a copy of this document. I am no expert on the mechanism of power, but I'm led to believe it's a slow process, judging from what I read. So I don't think it's absolutely certain that we'll know any time in the next few months. Having said all that, there have been noises from various places to say that the government is going to take steps pretty swiftly after the COVID recovery. So after furlough schemes and all that sort of thing come to an end, and the country is sort of back in a position where it was before the pandemic, if at that point the insurance industry hasn't got itself together at that stage to work out how to deal with this sort of thing, the government is really going to step in. So it may well be that sometime in July, August, towards the end of the year, we start seeing cages being rattled by Rishi and his cohorts.
Excellent, thank you. Just so that everybody's aware, I have put Stuart's email address in the chat for you to copy and paste at your pleasure, so that you can contact Stuart directly after this if you have any specific questions or need his support with your individual circumstance. I have one final question for you, which is about the festivals and events industry, and I don't think you answered it through your presentation, but forgive me if you did. Is it? I had heard noises about there being a hope that the government would underwrite insurance for festivals and events, but then that went quite quiet. So I suppose, is that not likely to happen now? Or?
That is an exceptionally good question, and I'm glad you asked it, because I'm doing another webinar on Friday for festival organisers, and I don't actually have an answer for that question just yet. But what I have been looking at are various stories within trade publications and various things about what may be the likelihood of it. I think my understanding of it is that the government has been reluctant to come forward and underwrite anything, because well, I'm not too sure why that is, but they've not wanted to start talking in those ways, because I think they want to give off the idea that no, all the festivals are going to go ahead, and if they start talking about will underwrite cancellation of them, it makes people nervous, makes people not want to book tickets. It sort of gives off the idea that there's a 50% chance this might not happen actually. So I think they're talking, I think they're trying to talk in very positive terms and all that sort of thing. Having said all that, I think if it comes to the crunch, there may well be a government intervention in it. But at the moment, at least as far as I last heard, they were being a bit cagey about putting their money where their mouth is. So again, this is a question that I need to get a confirmed answer to, but I know it's at least been floated that that's the question, but you know, the government are playing their cards close to their chest at the moment.
Yeah, absolutely. And I think, you know, the more time marches on, I suppose, festival and event organisers would need to have known the answer to that perhaps a month or two ago to make the decision whether to go ahead. So yes, I suppose maybe, hopefully, our roadmap is going to continue as planned, and events.
Sorry, 2 seconds. It says my TV is going to turn off in 1 minute. Oh, it's going to turn off in 1 minute.
Ah, yeah.
There we go.
Wiggle your mouse.
Yeah, I wasn't just dashing out, but yeah, I just thought my TV was going to turn off, and then who knows what happened at that point. But yeah, you're absolutely right. I mean, it's a question that, yeah, maybe everybody could have done with knowing the answer to about 3 months ago, but we are where we are, and you know, being positive, I think it's likely that we're getting to a point where everything's going to open up at the end of June, and hopefully that will be that. But we'll you know, we'll have to see.
Fingers crossed.
Yeah.
It's good to see that there was some really positive results from the trials that took place recently. So that gives people additional hope. I would guess.
Yeah, absolutely right. And it's very difficult, because I know that the actual number of policies that are out there, 3% were tested in the Supreme Court case. So this, whereas the news sort of said, produced big headlines saying great news for policyholders that insurance companies have to pay. In actual fact, it was a fraction of a fraction of a fraction that had to pay. And even out of those 3% of policies that were tested, only about half of them were deemed to have any response. So we're talking about 1.5% of the entire insurance industry that provided any kind of assistance for clients. So for the broad client base of hospitality across this country, you know, we feel extremely sympathetic to them, because it's just very difficult, and they've just not had that support from the insurance. Sometimes for good reasons, sometimes it's taken Supreme Court judgments to get to that particular point. For others, there's been some bonus. We've managed to get some payments for them, which has come in handy, which is great, but we'd much prefer to be able to get it for everybody. But we are where we are, and hopefully 2022 will be a good year.
Yes, let's hope for everybody. Well, thank you so much for all of your help and information and advice. I'm sure everybody else on the call would agree that it was a really helpful session. One final question: are you going to jump into that massive glass of cocktail behind you and swim off in distance?
Yes. I'm going to be like Marilyn Monroe or somebody splashing about in that. Yeah, I'm not sure what that is, to be honest. Is that, you know, what is?
Don't know. I'm sure some people would know.
It's
but
a weak fizzy Ribena, but I'm willing to get involved in anything. I was also, it took me ages to work out what that said, because I'm looking at it in a mirror image, as you probably are. So I thought it was start loving, sleepless nights, but I think it's mean start loving sleepless nights. But I thought it said start loving, and I'm thinking, well, that's a nice, you know, that's a nice thing to leave.
Call to action.
Exactly. Yes, exactly. Everybody start loving, and in order to do that, sleep less nights. So yeah, if you take nothing away from this, take that.
Stuart, thank you so much. This program of webinars wouldn't be a success without amazing people like you giving your time to support the industry, and we all really appreciate it. So thank you. And thanks everybody else for attending as well. We hope you took what you needed from it, and please do get in touch if you have any questions. Either Stuart's email's there, or we do have an All Hands to the Pump website that you can submit any question about anything to do with operating a licensed premises through this tricky period, and we will do our best to get an expert to answer that for you. So thank you, Stuart. Everybody, hope you have a good afternoon, and here concludes the webinar. Thank you.
Thank you everybody.
Bye. Excellent. I don't know what cocktail that is. I wanted to say it's a porn star martini, but I don't think it is because it doesn't have any passion fruit in it.
Oh, really? Okay, right. Yeah, your knowledge of cocktails is better than mine, to be honest.
I do like a good cocktail, I have to say.
Yeah, no, that's true. Yeah, it's sort of amber colour. What's amber? What kind of cocktails are that colour? Yeah,
Maybe something Cointreau in it, or no, Cointreau is quite clear, isn't it?
Yeah. It's a very good question. I mean, it looks absolutely bloody lovely, frankly. I mean, after 14 months of sitting in our living rooms, it just looks like heaven, doesn't it? But
yeah,
there you go. So hopefully that was okay.
it was brilliant. Thank you. Yes, right. I don't know many people that could make insurance interesting, but you managed it. So thank you so much.
Well, that is an extremely nice thing of you to say. I'm not sure I managed it, but it was, it's difficult when you're talking into an empty room, effectively.